Right, what's happening, people? Today we're going to go through this EU swing trade that I took. Now, there's a lot of reasons why we took this trade. As you guys know, we're heavy on our fundamentals, so I'm going to go through exactly why I took this trade, what sort of fundamentals, what macroeconomic reasons there were for taking this trade, and how we managed to get in. And it was quite an aggressive entry, to be honest with you. And it's a bit different to the trades I normally take as well. It was a bit more of a swing trade rather than an intraday play. But yeah, as you know, a lot of the work we do is off the chart. So prior to actually getting into this position, I had to look into predominantly the state of the dollar, right? So as you guys know, if you're in the Discord, if you've been watching the lives and stuff, the dollar at the moment is in a very vulnerable state. Now, obviously, our job as traders is to take advantage of this and do what we possibly can to actually get into a position, right? So let's straight into it. In terms of the macro, the geopolitical tensions, the reasons why I wanted to take this trade away from the charts, away from the technical analysis. So you guys know one of the things that we are looking at majorly this whole year has been a very much a at the forefront of our thoughts before taking a trade is the US and Iran war. So prior to taking this trade, to be honest, this whole week, we haven't really had too much escalation regarding the US and Iran war. Now, you guys know escalation in the Middle East leads to higher inflationary pressures and potentially a bullish dollar. But this wasn't the case this week. We weren't so much focused on US and Iran because there really wasn't that much escalation. So that was kind of out of the picture, which allowed us to look for them more bearish moves on the dollar. Now, what were we looking at in terms of why the dollar is bearish at the moment? Why it's dovish? So if we come over to Forex Factory is obviously where you see all of the sort of news releases. So you can see last week we had CPI and PPI. This came out as forecasted. Forecasted was slightly lower, so cooler inflation. A lot of the market were expecting higher inflation rates due to the increase in oil prices, but we actually come out with cooler inflation than expected. So that's one reason, right? Cooler inflation. Another reason, the week before, I'm sure you guys remember because it moved the market quite heavily, but we had a negative NFP reading. So it come out much, much lower than forecasted, and previous got revised as well. So not only has inflation come out cooler, but the labor market is also being affected as well. We also had retail sales come out a lot lower as well. So again, forecasted at zero point 0.2, come out at minus 0.3, and that's month on month for retail sales. And for retail sales, so not core retail sales, it come out as minus 0.6, and it was forecasted at zero point 0.1. So again, across the board, you can see that we have major data releases coming out as dovish for the US, dovish for the Fed. So not only have we got a weaker inflation, we've also got a weaker labor market and weaker growth as well. Now, the issue is, right, oil prices, if we come back over to TradingView, um, we can see that oil prices over the month of July have risen, right? So we dropped in June and then we come straight back up in July. And July we moved 44.35%. So this is expected to affect inflation and for us to see a bit of higher inflation moving forward. At some point, this is going to be shown in, your sort of CPI, PPI data readings that are coming out. So markets are expecting this. Now, although this may sound bullish for the dollar, the issue is, like I just mentioned, growth is low in the USA. Now, if you have low growth and high inflation, this leads to something called stagflation, which is of course, really bad for the dollar, right? So again, all of this data pointing towards a dovish dollar. Not only that, Kevin Walsh with his FOMC statement, he come out as neutral, right? He didn't really bring up inflation as much of an issue, even though it was a really big issue and it still is a really big issue. Kevin Walsh is coming out as neutral when he has every right to be hawkish. He's a known hawkish Fed member as well. So it seems like the US are trying to keep their rates lower, and the dollar is in a really dovish state right now. It's really vulnerable. On top of that, as well, we also had the US JPY intervention, which, if you don't know, you're essentially selling dollars to buy the yen. An agreement between the US and and Japan. So we have all of these reasons off of the chart, and this is what you guys need to be thinking, right? I know we talk about it in our macro desk all of the time. If you come over to our macro desk, I could show you what we put in last week, right? So we've put in here again Kevin Walsh non-committal, US and Japan FX intervention, Middle East inflation trade cooling. There wasn't really much escalation, potentially de-escalation. We had NFP, so a softer labor market, and then we had CPI come out. And all this stuff we're constantly posting into the Discord macro desk. To be fair with you, what I actually sent in there today was since the 29th of July, when Kevin Walsh come out in his FOMC statement, we started to shift our narrative, right? We started to shift our narrative towards a weaker dollar. And you can see here on the charts, as soon as we started to shift our narrative, what happened with price? You can see that the dollar got a lot weaker, so Euro USD went a lot higher. So if you guys are thinking that fundamentals aren't that important, it doesn't move markets, you can quite literally see it here. Go back and check all of our macro updates and see how the markets are affected. But now we're onto the good stuff, right? This is the stuff that a lot of people are interested in, the technicals. Now, obviously, I've just explained that we had a really strong bearish dollar narrative. So in my head, I'm wanting to get into these EU longs. So at this point, price was trading within here, trading up here. Sorry, I caught a little short-term short on EU. Again, I didn't want to hold it too long because it was against the overall narrative. But I'll tell you, to be honest with you, normally how I would react in a market like this, I would want to see price come further down into a discount from here and then move higher from there. But based on all that analysis I'd done with the dollar and understanding how weak it actually is, I thought maybe we won't get the momentum to actually trade down into this level. So, what is a first point of interest from this level that we could potentially reject? So, you can see here we lined up nicely with this 4 hour fair value gap. We lined up nicely with that 4 hour fair value gap. So, I'll set my entry from there, targeting the highs. This weekly high in here, I believe it was. Yeah, so this high up here. It's quite simple with the technicals. Again, there always was a risk we wanted to come lower into this discounted area. But even if we did, again, because I was so dovish on the dollar, this allowed me to trade a bit more aggressively. And this is what you use fundamentals for, right? If you've got such a strong narrative, you're able to trade that bit more aggressively to actually catch that move because you know the market's going to move. And being able to understand the macro narrative, the macroeconomics, the geopolitical tensions, and everything that's going on in the world, it's much easier for you to actually decide how aggressive you want to trade. Um, like I said, normally I would wait for us to come into a discount, but in this situation here, I thought we're going to react off the first point of interest because of how dovish the dollar is. So yeah, this trade come out quite nicely, 2.4%. I had 2% risk on it as well. So a nice little 4.8% on that trade there. But yeah, so essentially this video is just trying to tell you how important everything off the charts is before you even get onto the chart. And fundamentals just essentially allow you to understand how aggressively you want to trade that market and what sort of positions you want to be in as well. If you are an intraday trader, predominantly myself, I am an intraday trader, but I entered this trade on a Monday and I got out on a Wednesday. So I held it over 2 days. So when you do have such a strong idea in terms of your positioning and where you want to be positioned, you want to be in line with the big players, the big institutions, and understanding macro, understanding fundamentals allow you to do that. So if you're not already, jump into the Discord. We're posting all of our macro updates on there, like I just showed you. Literally daily, we're posting everything we're thinking, and we spend a lot of time on this. We spend a lot of time thinking about how we want to position ourselves and sharing it with the group as well. It's all completely free. We're talking about it in our lives daily. So, yeah, jump into the Discord if you're not already, but hopefully you got a little bit of value from this trade breakdown and got a bit more of an idea how important everything you're doing off the chart is. To be honest with you, the technicals behind this trade were quite simple. So, anyone could have taken this trade. But if you have that knowledge of why you're taking the trade, then it's quite easy to find out how to get it through technicals. But yeah, hopefully you got some value from this video. But that's it from my side. If you do have any questions, drop a comment, get into the Discord, drop me a message. But yeah, sweet boys, nice one.